IVM.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter. We're doing real estate after a long time. I'm so excited. My guest for the very first time on Paisa Vaisa, Knight Frank. Yes, I'm talking with Vivek Rathi, Director Research at Knight Frank India, and we're going to talk about what's been happening in the real estate market right after this short break. And welcome back. So, folks, we're doing real estate after a really long time. My guest today is one of the largest independent real estate consultancies globally. Yes, and also in India, obviously. My guest, Vivek Rathi, Director Research at Knight Frank India. Vivek, welcome to Paisa Vaisa. Really, thank you so much for doing this for our listeners.
Thank you, Anupam, for having me. Good morning, good day to everyone.
Good to have you, Vivek. Tell us about Knight Frank. Maybe some of our listeners haven't heard of Knight Frank, but how long you've been in India, what are the various services that you offer, all of that.
Sure, Anupam. So, Knight Frank has been present globally for 126 years now,
Wow.
and in India, 26 years. So, it's been a long presence globally as well as in India. And in terms of the firm, it is present across the value chain in real estate. And by that, what I mean is right from planning of cities to identifying land parcels, advising on what to build, what to do about monetization, and then managing those properties in terms of facilities management. So everything across the value chain is what we do.
Fantastic.
In terms of asset classes or subsectors as we call it, while real estate is real estate for everyone, we look closely across all subsegments of residential, office, retail, warehousing, even data centers. And then there are some of the new themes which have emerged in the real estate space, which is hybrid combination of real estate space as well as the service offering on top of it, which is your co-working spaces or co-living spaces, where the firm also participates in terms of providing services to their clients.
Yeah, it's an entire range of everything. Vivek, what's been happening in the real estate market post-COVID? If I look at March 2020 to now, June, July 2022, it's been it's been a volatile year, ups and downs. Just walk our listeners through residential and commercial.
Sure, Anupam. So it is an interesting tale, and why I say so is amongst residential and commercial, there was a different trend just before the pandemic hit us in March 2020. While the commercial office space, particularly, was going from strength to strength, both on demand as well as price dynamics. In case of residential was in a down cycle from the heydays of 2010 to 2013-14. Every successive years you were seeing sales going down and also prices correcting. Going back into the memory in 2012, 13, 14, and 16, 15, 16 period, there were several projects which were stuck because some thing or the other went wrong in terms of managing those projects. A large part of those projects in NCR and also in other major cities, which kind of drew a very bad memory for for consumers. So yes, it was not a general phenomena, but there were many of these instances which created a bad taste in the mouth of consumers. And then came 2016, when many structural reforms were introduced by the government, starting from RERA, which is Real Estate Regulatory Authority, GST, and then, yes, obviously, there was demonetization. Many of these were steps in the right direction for the long term, but in the short term, those created pain for all the stakeholders. And as a result, the market continued to slide down until 2019 and early 2020. So much to the extent that I would not be, you can call it apathy towards housing market, while deals were happening, but not really the kind of highs that we had seen in the peak periods of 2010, 11, 12. And in March 2020, when the lockdown happened, every one of us were confined to their homes, right? Everything was happening at home, whether it was work, study, even recreation. If there was one place where you had to spend your life on, yet it was your house. And that kind of changed the consumer perception, sentiment towards a home and its ownership. So while we've had housing shortage in the country, but then despite the housing shortage in the country for long, we still spoke about the down cycle in the residential market. But in 2020, during the pandemic, things changed and people started to appreciate the value of a house and value of an owned house, which is when this consumer sentiment changed. However, there were certain problems which came along with the successive COVID waves. So, whether it was the second COVID wave, which was more severe than the first wave, and therefore, despite the consumer interest to buy a house, there was uncertainty in terms of their income levels, in terms of the job or the business that they were doing, which kind of put them on hold in terms of taking that plunge to buy a house. Now, as things settled on the COVID matter, while yes, you can still talk about the third wave and the fourth wave, but then with the awareness and the healthcare system preparation, we are much more aware as consumers, as stakeholders, to deal with the pandemic challenges. And with that being in place, you saw consumers coming in great enthusiasm to purchase their house, and which is what is reflecting on both the volumes as well as prices in the residential segment. Now, when I spoke about all these things, we should also give credit to the government, which in some of these major markets contributed well in terms of re-energizing the market. So whether it was the stamp duty discounts, which were given generously in markets like Maharashtra, Mumbai, Pune, West Bengal, Kolkata specifically, and Karnataka. And this also kind of created some sense of urgency among consumers to make the best of it. So, this is on the demand side, which deeply benefited by the government interventions. And then, since then, now even while the government interventions have gone in many of these key markets, but now consumer demand stands strong on its own feet, and the market is in an upcycle both on volume as well as pricing front.
Yeah. If I were to ask you in real estate total as a sector, resi and commercial, what do you think would be the two, three major trends that have, changed in these last, since you said 2016 to 2022, that wasn't there, maybe 10, 20, 30 years ago? One, for example, could be the way loans have come up. The loan industry has become a little bit more formal. Are people, for example, going for bigger reputed developers, and so the smaller developer has moved out? So any trends that you see? And I know that, real estate is a very different market, and what happens in Delhi might not apply to Bombay, what happens in Bombay might not apply to Chennai. But aside, let's keep that aside. In general, what are the few trends that you've seen that have fundamentally changed the real estate market?
Yeah, certainly. So, Anupam, one is in terms of there are quite a few trends. Some of them transient in nature, which were applicable only during the pandemic uncertainty, and maybe those may fizzle out as we go ahead. And some of those trends which emerged during the pandemic or kind of got strengthened during the pandemic and will be a long-term trend. So some of these long-term trends are both from the demand side and supply side. So from the supply side, if you see, the credibility of the supplier has become very important. While the market is buoyant, consumers have participated enthusiastically to buy their house. They are cognizant of the challenges faced during the last cycle, and therefore going ahead with only credible names from the supply side. So even while you have the comfort of RERA, which was not existent before 2016, but then developer credibility is a unique factor which consumers are considering to ensure that their purchase is made at the right place. The other things are with respect to the size of apartments or kind of projects that the people are looking to buy. Now, one is in terms of the size of apartments, with more time being spent in the house, people started to consider more space within the house, and therefore you saw the ticket sizes going up, or some area of those apartments going up wherever there was possibility from the perspective of affordability of the consumer. So on that account, during 2010, during 2021, we saw consumers buying apartments which are larger and have amenity spaces which are green spaces, have amenities which kind of allow movement within the projects
Hmm.
for them to spend time confined on mobility in terms of those
Yeah,
projects. So these are some of the trends from the consumer side as well as the supply side that we saw.
sure.
From the commercial office space side, some of the new trends that we've seen is the attribute on flexibility. Now, while the pandemic came in, there was a question mark in terms of utilization those office spaces when people were working from home. But with now that being behind us, there is a definitive return to office which we have seen, and the dimension on hybrid workspaces or flexibility on these workspaces is something that has become a feature. Now different organizations, different occupiers are doing this in with a different combination of, say, maybe a 70-30 work from office, work from home, or an 80-20. But conclusively everyone has come to office spaces, and a hybrid working model is something that works both for the organization which wants to ensure stability and growth of their business, along with the value system and the culture that they want to promote, and also from the employee perspective, who gets ensure that the work is delivered in terms of the most important features on collaboration or physical touch and feel of the space, or also having the flexibility in terms of where to deliver the work from. So this is one trend. Other trend is in terms of having sustainable spaces or sustainable engagement, more prominently seen in the commercial spaces, followed by residential. So on this dimension, we've seen there is a preference from starting from the investors, and also from the occupiers, corporates who sign up for these office spaces. So all of them have preferred better spaces, which are not just better in terms of the build quality, but also in terms of the way they impact the ecology. So ESG is the theme which is very popular now. Now, while focus mostly is on E and S,
Hmm.
and E becoming the E on in environment becoming the most talked about feature, and most efforts being directed towards reducing the carbon footprint of your presence and other aspects, which is what is a trend which is likely to stay for long, because it has become an important feature, and everyone beyond the real estate space also recognizes the need for it. So these are some of the trends which we see during the pandemic, and also staying for the long term.
Wow, that's a lot. So, starting from bigger houses, more amenities, reputed builders, co-working spaces, and of course, like Vivek said, ESG, there's a lot of stuff happening in the sector. Folks, don't go anywhere. On the other side of this break, we're going to talk about outlook for residential real estate, commercial real estate, and much more. We'll be right back. And welcome back. Quick, let's talk about the future now. Let's talk about outlook. A lot of stuff is happening. Let's start with with residential real estate. A lot of our listeners, do this entire rent versus buy decision. What's your view here? What's your view on, I don't know, on rent versus buy, on where property prices are headed from here, especially in resi, where, like you said, it's been a pretty tough market for the last, I don't know, probably 5, 6, 7 years. What's your view?
Sure, Anupam. So the rent versus buy decision, yes, I'm sure everyone from the consumer segment kind of considers this as before deciding their purchase. But so I would look at it into two aspects. One is end use, which is driven by other factors beyond the financial factor of what makes more financial sense. because when you're
Hmm.
talking about a house, you're talking about some sense of connection with the property, whether it is in terms of the emotional association, or connect with the social network that you enjoy in that particular place, or having that stability of a property during the tough times. So these are the aspects which will never be calculated or captured in your rent versus buy decision, really, right? If when you move to deciding it on the basis of rent versus buy, yes, the equation on the pure cost dimension favors the rent decision, but that is not all the way you should be looking at it. Rental yields in India have been between say 2 to 2.5, 3% for a very long time. In comparison, the mortgage rates have been much higher, as high as 10 to 11%, maybe 5, 6 years ago. So what actually one should look at is the gap between the mortgage rates, which is the home loan interest rates, and the rental yields, which had come down to as low as about 3.5% until last year, probably the best in a very long time. And that, along with the tax incentives that the government provides a home buyer, or the rent savings that one does, kind of further reduces this gap. Now, this is on the simple dimension on EMI that you're going to pay as a consumer versus the rent that you're going to pay. The other aspect is in terms of the capital appreciation that happens. Yes, there is no set formula or a general thumb rule of capital appreciation, because it is such a local product that local growth dimensions on both infrastructure, physical infrastructure development, social infrastructure development, commercial, or job growth in a particular location will drive
Yeah.
the growth. But even when you look at it from a broad standpoint, inflation plus a certain percentage point is what is generally being captured by real estate in these major cities. And what
Hmm.
that means is the rental yield that you're going to save, plus the capital appreciation that happens in the holding period.
Yeah.
Now, what kind of capital appreciation can happen? No one can, confirm on the extent of capital appreciation that happened. I gave you some hints in terms of, inflation rate plus certain percentage points, and that too, in general. Now, if there have been highly expensive markets, there you could see, a trend which is in contrast and maybe on the downside, and in mid segment or the developing yet developing markets on the higher side.
Sure.
In terms of the current situation, where are we? We are at a stage where property prices in 2021 at least were at 7, 8 year lows, right? And on the other side, the cost of construction and other allied input items continue to go up. And yes, it does not go up randomly in 1 year, but it continues to build up in at the economy level every year. What happened during this 6, 7 year period was there was a gap which was built up
Hmm.
between the product price, which kind of remains stagnant or down in many markets, and the costs going up every year. Now, with that, all of that was being absorbed by the developers, real estate developers, because there was no enthusiasm in the demand, even while demand deals were happening, sales were happening, but not really in great, vibrant measure. Then came 2022 with the prolonged pandemic situation, and also the Russia Ukraine war, which kind of disturbed the supply chain globally, putting pressure on many of these commodity prices, including steel, pushing those
Yeah.
prices to maybe 50, 60% higher in just a span of 1 year. And this, in the background of demand, strong demand, has created a scenario when this increased cost or an additional margin is now being translating into higher property prices. So certainly after the 6, 7 year down cycle, we are at a stage when property prices have started to look up. It has gone up by 5 to 7% on an average across the key cities, and the trend is upwards, making it a good time for consumers to look at it from the property price cycle perspective.
Sure.
How long will it hold? What factors will determine it? Like we discussed, domestic economy is strong. There are global challenges which has disturbed, for a period. But then,
Hmm.
if other things remain stable, or improvement on pandemic scene, improvement on the war situation happens, then we are looking up for a good market.
Commercial, Vivek, because commercial, like you said, if the economy is doing well and projected to be doing well, then commercial real estate should benefit from that. I have just two questions from here. One is, of course, the trend that you see going forward for commercial, and how should investors play that? Because this last 1 year, I've had a lot of guests on my show which have very specialized real estate products meant for retail or for retail investor stuff like fractional ownership and a lot of other stuff. So let's go into both of these. One, your view on commercial real estate, and two, what's a good way to play this? There's also REITs also. How could I forget that? Please.
Yeah, sure. So on the commercial front, so the largest segment from the investable space is the office space, while there are a host of others in terms of retail, warehousing, data center, property types. But even if we focus on the office space for now, in terms of what's happening on the office space, we spoke about how, being confined to homes, delivering work from home, delivering study from home. Now we are at a stage where return to office has happened. In terms of the demand for office space, which peaked in 2019 at some 60 million square feet gross, transaction levels went down in 2020 and picked up in 2021 and now in 2022. So what we are speaking about is an underlying market where demand from large corporates, mainly the global corporations which deliver work from India, and also the homegrown corporates have been increasing. With that happening, what do you see? You see that occupancy levels have stabilized in the office asset class, and on the rental side, rentals are generally stable with an upward bias in some markets, like say Bangalore, Hyderabad. Now, what are the other overlaying factors in terms of the state of commercial office market? Most of the demand in the IS in the office market in India is dominated by the IT sector, by many of these GCC, global development centers of the MNCs, IT companies, and for them, a sub $1 rental is something which remains attractive from an office space perspective. The other factors which are more important in terms of availability of talent and stable political and economic environment for them to ensure business continuity, because they're going to serve the world from this particular presence. All of those fundamental factors are in place for ensuring that the office market in 2022 will kind of just about be a tad lower than the 2019 peak, and
Hmm.
2023 conclusively going ahead of the pre-pandemic level peak from the demand perspective. Now, how does an investor, or more so a retail investor, look at it, if that is the question? So there are a variety of option in terms of participation in office spaces. So assuming one is an investor, depending on the engagement level one wants to have with the property, can decide between direct ownership of the property, or fractional ownership, or an alternative investment fund, or a REIT. In terms of the regulatory oversight and the ease of transacting, REIT is on the highest order, considering you have strong regulatory oversight, both in terms of management of these assets, acquisition of these assets, as well as the distribution of incomes, that and the compliance or communication that the manager has to provide to the investors. And on that account, and the liquidity feature offered by these, the counterparty feature, which is the best on these, REITs have turned out to be a favored asset class. Now, what kind of returns have we seen, or what is the depth of these REIT market? Right now, we have only three office REITs in the sector. More are in the fray. Similarly, on the other segments of retail and warehousing, which are in the fray. What has been the performance of these three REITs in the last few years? So, about, if you look at both the rental yield or the annuity distribution that happens, is been about 6.5-7%. And if together with the capital appreciation, on average for these three, for the last 2.5 years, it's been 16 to 17% cumulative rental on both, average 16 to 17% per annum, when you account for both capital appreciation and rental yield, which I think is a return which will, give a comfortable picture to the consumer. Yes, depending on when you have bought in the cycle of price movement will determine your individual return, but I am talking from the time when they were listed until
Hmm.
the recent period. So this is with respect to the REIT, and then there are other variables in terms of AIF, or fractional ownership, where the dynamics on engagement level, or regulatory compliance, or the liquidity will change depending on how an investor wants to play this basis. The annuity versus capital appreciation dimensions can decide. A REIT will signify, an asset which is stable and provides strong annuity returns, and the others, in terms of straight owned property, or direct property acquisition, will be more from a growth perspective.
Okay, thanks for that, really detailed answer, Vivek. Let's wrap up this episode with, one of the most important questions. A lot of us look out for a broker for various type of services. Could be rent, could be buying a house, could be even looking out for commercial real estate. So, and the role of a broker, so to say, has also changed significantly in these last 5-10 years. There's a lot of more expectation now. Brokers themselves offer a lot of services, as you would know. So, if I were to ask you to make a checklist of the top three or the top 5 points that our listeners should, look out for while choosing a broker, what would that checklist look like?
Sure. So the first important checklist item is the RERA registration of the broker, because gone are the days when you would see more real estate brokers than even grocery shops. Right? Everyone who had certain connections could become a real estate broker, and after the deal is done, as a consumer, you had no recourse in terms of who's done the deal, or if there are any deficiencies in that transaction. So regulatory oversight of real estate regulatory authority, which is signified in the broker's RERA registration, is something that one should look at. So RERA registration, which is valid, and accordingly, when we just ensure this, then it implies that the broker is transacting only in RERA registered properties for the new projects. Then, in terms of the credibility of the broker, or the time that they have spent in the market, some amount of background search or some amount of feedback should be gathered on that account, so that even after the regulatory comfort is there, you still have some feedback in terms of how the past set of dealings, or general feedback is on the broker, which is generally available if you go on with a brand which is a national broker brand. You will be able to identify some instances where you've had maybe positive or negative feedback from the past set of consumers. And if you go through a local broker, there some amount of local feedback can be gathered basis your network there. So these two dimensions are something which can be looked at. The other aspects will be with respect to the contractual terms one would want to sign up before the deal, which will be specific to every broker and consumer engagement, and can be dealt accordingly.
Fantastic, folks. There you go. That's a nice comprehensive list from everything from reputation to experience to RERA registration. And that is a wrap on this episode of Paisa Vaisa. My guest, Vivek Rathi, Director Research at Knight Frank India. Vivek, thank you, really. Thank you so much for doing this for our listeners.
Pleasure, Anupam. Thank you. Thank you to you and your listeners for having me.
Sure, thanks. And thank you so much, listeners, for listening to this episode of Paisa Vaisa. If you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I am your host, Anupam Gupta, B50 on Twitter. And thank you so much, folks, for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.